I want to get you this hour to Nick Robertson, who is in Riyadh in Saudi Arabia, where, Nick, the Defence Ministry has just released a statement that 2 drones were intercepted and destroyed at one of its largest oil refineries. Nick, the Ras Tanura refinery is hugely economically significant. What do we know at this point?
Yeah, it's a very massive, sprawling facility. I've been there on a number of occasions before. It covers a vast area and is very important to Saudi Arabia's economy. It can produce capacity about 500,000 barrels of oil a day. That's a significant number. What we're hearing from the spokesman at the Ministry of Defense here is that 2 drones were intercepted as they were flying towards that, or in the vicinity of that refinery. These drones were intercepted. Debris fell. There are no casualties. And the spokesperson saying that this falling debris lit a fire in the area. This is obviously an area of concern for Saudi Arabia, thinking here of the the foreign ministerial level GCC virtual meeting that happened yesterday, a joint statement from those GCC foreign ministers talking about a very strong diplomatic signal saying that they had the right to take all necessary measures to protect their security and stability. So it comes within that context. Very clear diplomatic messages being sent from the Gulf states to Iran, and that fits in with the picture of the attacks that were witnessed over the past 36 hours in the Gulf.
The Strait of Hormuz, a major shipping route in the Middle East, is under threat, and the oil tanker Skylight was struck off the coast of Oman. Now, these strikes have caused oil to rise by nearly 9% during trading today. U.S. stock futures are also rattled, taking a dive before trading begins this morning. Now, CNN business and economics reporter Anna Kubin joins us now from London. This happened over the weekend, obviously, but now markets can react. Can you talk about what you're seeing?
Yes, Audie, well, you've sketched it out there. We're seeing markets react pretty negatively to this. We're seeing stock indices across Asia and Europe in the red today. And of course, US futures are pointing to a very difficult day ahead for Wall Street. But I will focus on oil, which you've mentioned, which is what all investors really are looking at today. That global oil prices, Brent, which is the global benchmark, rose as much as 13% this morning, which is an enormous jump and really reflects the anxieties that traders have about whether or not global oil trade will be disrupted through that all-important Strait of Hormuz, that tiny waterway through which a fifth of the world's global oil supply travels every single day. Now, even if Iran, which partly controls that strait, hasn't fully blocked it, many shipping companies are voluntarily avoiding it because of the security risk. Maersk is a Danish shipping company. They've blocked all their vessels from going through. And even though some traders are imagining that the disruption to oil might last a very short amount of time, there is a concern that this will become a prolonged disruption, and in that case, some analysts are betting that the global price of oil will hit or even top $100 a barrel. I also just want to quickly point out airline stocks falling today. Of course, there's been huge disruptions with airlines and airports all around the world, and European gas prices were up around 23% this morning because Europe relies on much of the LNG, liquefied natural gas, traveling through that all-important Strait of Hormuz.
I want to talk about that with Iman Nasseri, the Middle East Managing Director for the energy consulting firm FGE. And as oil traders, good to have you, sir. As oil traders scramble this morning to assess the extent of the disruption of oil supplies, these pictures from Saudi Arabia of the fallout and intercepted Iranian drone today will likely add to those nerves. We're looking at rising oil prices, and I'm going to get those up on the screen now. This is an increasingly widening regional conflict. What is your assessment of the threat level to energy supplies at this point?
Thanks, Becky, for having me back. Energy supplies are basically at risk. We have 3 types of energy supply at risk at the moment. One is as Iran is being attacked, and basically the ultimate aim by President Trump might have been announced to regime change. There is going to be a risk of supply disruption of 2.6 million barrels per day of oil from Iran. But the bigger current situation that the market is dealing with is the closure of the Strait of Hormuz, which basically 20 million barrels per day or more, and adding 5 million barrels of product. That is more than 20% of oil supply in the market going through this passage, which at the moment has been halted to a great extent. They have been talking about one or two vessels owned by Iranian or Chinese going through, but a significant amount of that flow has been disrupted. That is significant. 20 million barrels per day of supply every day not going to the market. And the last but not least, which is yet to be basically unfolded and has started over the past day, but more so today, is the attack on energy infrastructure in other countries than Iran. We heard about the headline of Saudi Aramco Ras Tanura refinery. We heard about the Kuwaiti refinery once a few days ago, 2-3 days ago, the beginning of the war with debris falling, and then again this morning. And we've had Duqm port, we have had Jebel Ali. So the next level is how long basically the Strait of Hormuz will be effectively and technically closed, and also if there will be a spillover of this attack of massive ballistic missiles and drones coming to the region, going into the energy infrastructure. Refineries, fields, and pipeline infrastructure are at risk.
On the Strait of Hormuz, tracking showing tanker queues are building inside the Persian Gulf. What is your estimate of the level of traffic in the Strait of Hormuz right now?
Yeah, right now, I checked again, we look at some tanker tracker services, and live it shows, like I did last time and again today, one or two vessels, mostly attributed to Iran or China, around the passage that is basically being announced to be blocked. Inside, there is a significant amount of traffic of vessels hanging out. We think there's more of a flow of that a small portion eastbound and basically out of the Strait of Hormuz than any vessel at the moment coming through inside the Strait of Hormuz. I think that remains to be closed as long as there is a threat and there is this missile and drones coming to the region. I don't think any shipping company or any insurance company or any oil and gas trading company will take the risk of sending vessels through. However, as I said, there seems to be a few vessels going out eastbound and mostly attributed to either Iran or China, which one could assume that are basically have the indemnity of Iranians being linked to Iranian oil trade itself.
At what point could this conflict upend the global oil market and roil the entire global economy? People expected an action by now from IEA to release inventories. Again, we have had at least 2 days of oil supply stopping. That's 40 million barrels of oil that would have been en route to destinations. A few more days could potentially be handled and basically offset by inventory draws in the import terminals, also fast speeding, if we assume in a few days the flow will resume. However, again, the market is expecting to see some sort of emergency release of stocks from the OECD countries. Some of the countries have started to set some policies against exports, such as Thailand, Japan, Korea, or draw from inventories. But that's one action that the market will expect to come to help to calm the market down. Although, again, the market has not really yet priced in any significant damage to supply beyond what we have seen so far. And the second is OPEC. OPEC Plus decided to unwind only 200 KBD, 206 KBD, which is insignificant and basically not showing the level of concern
or worry from the OPEC member countries in terms of market being undersupplied. If we see the suppliers and the consumers in terms of OPEC and OECD feel that the pressure is building on their end and the prices reflect that pressure, we believe both sides can potentially bring new supply and offset this. In my opinion, oil has the easiest kind of cure and solution to this current problem. Gas and LNG perhaps is not as easily replaceable if the situation prolongs. And also we have other commodities, LPG and naphtha, each of them 4 million tons going to Asia, and our team in Asia are monitoring this and believe that if this situation stops, every day 4 million tons of LPG and naphtha not going to petrochemical sectors in China, Japan, Korea, they will have to either shut in, start to bring the rates down because there is no alternative for those easily replaceable.